your boy Nature, aka Nature. Alright, gang. So I just want to tell you what happened. I was right. I said that, Fibonacci for GBPUSD, I said, it was going to retrace at 61.8 and went to 50. And then it was going to resume in the overall trend, which is a downtrend. As you can see, Fibonacci was just retracing off of 61.8 and 50 level. Okay, and then it resumed back down from the 61.8 to the 50 level. Now it's back to 38.2, okay, and we're heading into a downtrend right now. All right, so price was just retracing. It found at a resistance. Okay, remember, if it's a downtrend, it's going to retrace it at a resistance level before it's going to pull back, before resuming the overall trend, to let traders and other traders, you're not just the only person that's trading, get into the trade. So these are strong levels: 61.8, 50, and 38.2. Where traders get in, where price will pull back to, so other traders will get in to their overall trade. Okay, so those are the levels: 61.8, 50, and 38.2. Exactly what it did. It went all the way up to 61.8 before retracing back. It found some resistance at 61.8. Even 50, really 61.8. That was like the resistance. It went all the way up to 61.8 before wicking back down. To the 50 and the 38.2 extension. Okay, before going back to the overall trend, it found resistance at 61.8 before going back in the overall trend, which is down. As you can see, I knew it was going to happen for the day. I didn't trade. I didn't get in this trade, but I knew it was going to go back down to 38.2 and head back down even to 23.6, and we're in a downtrend. We have to see for the overall week, at least for this week. The overall week is heading down. For the overall week, the week is heading down. It's not heading up. So it was just retracing for that day. But for the overall week, we're still in a downtrend. It's still in a downtrend. Okay, if you would have got in right here at 1.4765, you're still in profit. Okay, and we're heading back down to 23.6 retracement levels. Okay, so that's all I really wanted to show you. You can see it on the 1 hour chart too. See big consolidation right here, big consolidation right here. At the 50 level mark, that's where price was consolidating. It found resistance before price. It went all the way up to 61.8 before the sellers came in. This is a bearish engulfing pattern right here. Bearish engulfing pattern, as the red candle is engulfing the green candle. So this is a bearish engulfing pattern. This happened on a 68.1 extension level or retracement level. And once we seen that, I knew it was going back down. It went back down all the way to 50. And it was retracing at the 50 mark. It held there for yesterday. It held there at the 50 mark before sellers, another bearish engulfing pattern, or another bearish engulfing pattern, or more bullish pattern. You can see the long candlestick when the body is a long red candlestick or a green candlestick. But for this example, when the body is a long red candlestick, it means that sellers are in control of the entire session. So sellers are in control were in control of this entire session. Actually, sellers were in control for the entire day. As you can see on the day chart, sellers are controlling the whole day, and push price from 61.8 all the way back down to 38.2. As you can see, price went all the way back down to 38.2. It actually went past 38.2. It might go to 23.6 retracement level. We don't know right now. But it still is in a downtrend for the week. We're still in a downtrend for the day. It's going. So price just retraced back to one of these levels. Is what the Fibonacci retracement is about. It's going to retrace back to one of these levels: 61.8, 50, or 38.2. Usually 61.8 or 50 before resuming back down to the overall trend, which is a downtrend. As you can see in the last couple of days, it's been going down. It retraced it back, found some retracement back at one of these levels of resistance. Found it retraces back to a resistance level. For a downtrend, it's going to retrace back to a resistance level with Fibonacci. For an uptrend, it's going to retrace back to a support level. And we still got to do that, and I still got to show you guys an example. It might be just a different chart period, a different chart of how to use Fibonacci retracement on an uptrend and how it's retraced back to a support level. But for a downtrend, this is for a Fibonacci downtrend. Okay, so you find the swing high to the swing low. All right, and then the theory behind this is that price is going to retrace back to one of these resistance levels, whether it be 61.8, 50, or 38.2 before resuming back down to the overall trend. So that's what it did. Okay, these are strong levels, 61.8, 50, and 38.2. We already went over those. That these are strong levels that traders looking, a lot of traders and everybody are looking at those levels after price pulls back to get into the trade. So price is always going to pull back. It's not just going to go straight down. It's going to pull back to one of these resistance levels before resuming the overall trend, which in this example is a downtrend. So that's just that. This is the 4 hour. Same thing on the 4 hour. You can tell the overall trend by looking at the 4 hour and the daily. If it's going down on the 4 hour and the daily, and the 1 hour is really, really good too, then you know that price is going down for the day. So that's just a little trick. And as far as how to play it, once you're in a trades open at 2 o'clock in the morning. London session, that's when it opens at 2 o'clock in the morning, 2 or 3 o'clock in the morning. You want to play that out until about, once you're in that trade, you want to stay in that trade for the rest of the day. Especially, you got to check and make sure around like 3 o'clock, 3:30, make sure it's going in that direction. And then you can like relax for a little bit, because, it's going to probably continue going in that direction into the New York session. The New York session starts around like 6, 7, 8 o'clock. If it's going in the London session and it's going in that direction, you want to keep it. You want to stay in that direction so you can maximize. That's what I do. I at least stay in that direction. I don't usually get out the trade. I'm not a scraper. I'm like a day trader or like a entry trader, where I sometimes swing trade where I stay in a trade for more than one day, maybe for a week, depending on if that's the overall trend. If the overall trend is a downtrend. Especially if I found like a good entry. Like if I had a good entry right here at one point, where the 100 mark is at, and I got in right where, price went on the 100 mark, and I got in right after that. That's like swing trading. That's like day trading, where I would never got out that trade. I'll still be in profit right now to this day, because as you can see, price never went back up to this 100 mark yet. It hasn't yet. So I would have got in right after the 100 where this red candlestick is at, and I would have got in right here at the top, because you sell at the top, so I would have got in right at the top. I would still be in profit right now. So sometimes I do that. I have done that in the past, came up a few thousands. Or sometimes I just stay in for the day. I just ride out for the day, especially if I know the overall trend is going up or down, and it's about like 2 or 3 o'clock, and I'm like, okay, it's going to continue going down, because the candlestick is going to form, but then it's going to continue forming down. Like for example, like it's going to make, you see this candlestick it's going to make a longer candlestick. Like it's not, sometimes they're going to be small, but it depends. Like the candlesticks usually you have to wait for it to form out, like, and make these long candlesticks. You know what I'm saying? You don't want to just okay, I got in for, I made $50. No, you can ride it out and let the candlestick form and actually make a candlestick. It was just like some people just get out on a candlestick when it's halfway full. No, you might as well wait it out and let the candlestick form all the way. Because that's what the candlestick does. You got to wait for it to form all the way before you get out the trade. Once you start seeing price going back in the opposite direction, you start seeing, look at Fibonacci, look at the retracement levels, and you just already went over the Japanese Fibonacci's. There's signs when price starts to wick, and where it starts to make certain candlestick formations. That price is doesn't want to go down anymore or go up no more. Like yesterday, I seen that sellers were in control. They at 61.8 yesterday, and I got out. We made a good profit. So it's about not being too greedy. Sometimes I do ride it out though for for the day. Especially like I said, you're in a trade for 2 o'clock, 3 o'clock. You ride that out the whole day, and you get all your profit. Okay, and that's how you do it. And that's just basically what it is. I just wanted to show y'all that price did resume back in the overall trend, which was a downtrend. For the day, it went all the way down to 38.2. Extension retracement level. Okay, we were at 61.8 yesterday. And it went back. It finally started. It finally broke. It was in a little consolidation period right here. Consolidating. I actually would draw the box around that. Let me show you that real fast. Like, we would draw a rectangle around that. We would draw this rectangle right here around this period of consolidating. It's consolidating. Once it breaks the box, you get in the trade. Okay, so boom, broke the box. You're in the trade. Okay, and you ride that out. Okay, and that's all you do. You wait for a price to consolidate. It was consolidating at the 61.850 level, retracement level, before it started resuming back down. Okay, to 38.2. All the way down to 38.2. So it might even go to 23.6. Okay, so we'll just play. The day already over. Like I said, I didn't get in the trade, but I wanted to show y'all that price did go to 38.2 and did resume back in the overall trend. Okay, it was just retracing at 61.8. It found some resistance of retracement at 61.8 and even 50, as you can see on the 1 hour. It found some retracement at the 50 mark where price started resisting. It found some resistance at the 50 mark on a 1 hour chart. Price started resisting, letting you know that price doesn't want to go up. You see all these candlesticks with the wicks going up. Those are resisting. Price is resisting those levels, meaning that price doesn't want to go back up. Okay, and sellers, and once you see this long red candlestick, bearish engulfing candlestick, as the red candlestick is engulfing the green candlestick, you already know that sellers are in control. So on top of consolidating, price is consolidating. Look after what happens after price consolidates. It's a big move. Every time price consolidates, it's a big move after that, a big trade. Either if it's an uptrend or if it's a sell or a buy, it's going to be a big trade. And you can see it's a big sell. Sellers are in control. Okay, so you would draw the box and wait for price to break the box. Okay, I talk about that too. So that's one of the trades. That's one of the ways I was learning how to trade through Swag Academy. Shout out to Swag Academy. Make sure you check his YouTube video out. He has a lot of information on there. But you will wait for the box to break. Once the box break, you see a little mini consolidation on the 4 hour chart too, right here. Consolidating at the 50 level mark. It breaks the 50 level mark. And it heads all the way down to 38.2. If you would have got in at the 50 level mark, you would have had, and it went down. Right now, you'll be in profit. Depending on your lot size. You could be like up right now $200, $300, maybe even more. I would probably be up right now like $400 or $500, depending on my lot size. And I'll show you guys some of those examples of live trades soon. So y'all can see how I trade and like what numbers I use. I show y'all a little bit, 50 and 20 cents, what could do. But I'm going to show you guys what I can really do, and how much money you can make. And practice on the 5 minutes. Practice on the you want to practice on with 5 cents, 10 cents, 15 cents, 20 cents, even 25, 30 cents. Practice there. I've been through that already, but practice there first. That's why I'm not. You guys will see though eventually. Gang, you will see, all how I trade, and how much lot sizes I use and stuff like that. Um, and how much money I deposit into my account. I'm gonna show you all that, on a live account very very soon. But I wanted to show y'all some demo accounts, and just so you can get this, as far as your psychology is concerned. You will wait for the price to break the consolidation at the 50 retracement level before resuming back in the overall trend. Okay, so you wait for price to break the box. It broke the box. Boom, bro. Once it breaks the box, consolidating, breaks the box, you get in for the trade and you ride it out. Okay, until now. This happened around like 2, 3 o'clock, and it's now 12. 1 o'clock. The market closes at 5, so of course it's slowing down now. It's slowed down, but like I said, we would have got in at the 50 retracement level. And I said it was going down for the overall day. I said price looks like it's going to find some resistance at 61.8 before heading back down to the overall trend and heading back down to 38.2 retracement level, because we're in a downtrend. Still in a downtrend. It was just retracing. Okay, so this is how you use Fibonacci retracement. These are my ideas. What you should do: draw the box around the period of consolidating and wait for the candlestick to break the box. Okay, use the 1 hour, the 4 hour, and the daily to really find out the overall direction of the trend. Okay, so that's all I wanted to show you guys, is how price did retrace back and found some resistance at 61.8, 50 before even resisted back at the 50 mark. As you can see, of resistance, you see a lot of wicks, a lot of candlesticks, just small candlesticks, a lot of indecision, a lot of consolidating going on before resuming back in the overall trend, which was a downtrend. If you would have got it around 3 o'clock, depending on your position size, like I said, you could have made a couple hundreds. Like from yesterday and today, that would have been like 400 or 500 we just made right there. It's that easy. It's that simple. And I'm gonna be here for y'all. I got y'all, gang. I'm gonna post some more videos soon. So don't worry. Watch these videos. I hope they really help. And I'm gonna do whatever I can to help y'all. Make as much money in this market as I can. All right, gang. It's your boy Nature, aka Nature. Gang.